A little bit more about myself. I'm 29 years old. I'm from Chennai. I've done my graduation from Loyola College in Chennai. It's a very renowned college here in Chennai. And post graduation, I did my PG in international business at the University of Leeds. It's in the United Kingdom. Recently, I started prepping for CFA. So I did my level one in November last year, which is where I had come across Neil sir. I was with Zell for level one, and Neil sir was teaching us multiple subjects. So that's in a nutshell. I'm sure many of you have come across Neil sir in some way or form through Zell or through his LinkedIn post, his teachings, etc. So I've recently just completed my level two. Uh, and career-wise, I've been heading the marketing and operations for a company called Fans on Stands. I've been in this role from 2018, so I've almost completed 7 years in this role. I started out as an intern at the same company. I've stuck with them. So would love to explain a bit more about what we do at Fans on Stands. It's very different from the world of finance. So, in Fans on Stands, we are in the hospitality and sports industry. So, I'm sure everybody in some way or form do follow some sports, or you would have, heard about uh, various kinds of events happening throughout the globe. You have your F1 calendar races, like 24 races happening across the globe. You have your cricket and football World Cups. You have tennis, your Grand Slams, which happen in different parts of the world across the year. So we at Fans on Stands do a very small, I would say, we contribute a very small chunk of the big ticketing sales. We have specialized partners for each sport, and we curate tickets and we sell it to people. So hospitality packages, stuff that is hard to get by, we get a little bit better access to that, and we cater to our audience which are based in India, abroad. Uh, Pre-COVID, we used to do a lot of events. We used to do mice. We used to do marketing events for company product launches, etc. Post-COVID, we've again come back to our sports niche because that is something that is kind of our core specialty. And even in sports, our core specialty is Wimbledon. So we do hospitality and debenture packages for Wimbledon. We take people from India to the UK to attend, let's say, the semi-finals or the finals or even other matches. And even F1 races, we have access to paddock clubs. We work with certain teams for specific races. So on a professional side, I'm heading the marketing and operations. So I speak with the clients as well as the suppliers at Fans on Stands. And apart from that, I'm a husband and a father to a little toddler. We've received a baby daughter in 2024. So life has been, transitioning into the next phase after phase, which is also, very much the topic that I'm going to focus on. And I'm a foodie, I love movies, and I'm a curious learner. So if there's anything new that comes up, there's always an intent or intention to understand and learn what new is happening, whether it's in the world of finance or anything else. So yeah, how I got into investing. So I'm basically a Marwadi. I've been in and around people who are in the stock market who have either traded, invested, or been part of the stock market floors since a long time. My dad himself was on the floors of the Chennai trade center. We have a trade center here. It's, of course, I would say 2% of what Bombay Stock Exchange is, or even lesser. But it was significant at the time for Chennai. So dad was working there initially. So I've always been familiar with the stock market. My first experience was in 2013-14. I had, of course, not my own money, the pocket money which I used to get. So started slowly investing because I was encouraged to. I was introduced to the idea that there is something called the stock market. There's something called equity shares, and companies that are doing well offer the opportunity to everybody to participate in their growth. That is how I was introduced to the stock market. So at that particular time, absolutely no idea on the intricacies. I would still say I'm not an expert in anything, but I started off very small, used to buy blue chip companies, companies which I have used myself, etc. So that's how I began my investing journey. Uh, at this particular point, if anybody has any questions, please raise your hands or just chip in. It's not going to be a monotonous session, I hope. So yeah, uh, so the core of today's session, I've actually followed all the sessions that we've been doing on Circle of Clarity, where Neil sir has taken you through the processes of how to research on stocks, how to build, a report that you can refer to, how to analyze financial statements. That's completely relevant. And we've also looked at Vatsal and other people talking about their journey. So I wanted to step a little away from finance for a bit. But to step away from finance, let me just establish first that The session still is about finance and investment and growth, but we are going to approach it from a completely different perspective. So let's get the basics sorted first. I'm sure all of you, in some way or form, know about these instruments. So as you progress in life, as you grow, milestone on milestone, you will get access and entry to different instruments, to invest, to put in your money, to grow your money, to grow your wealth. So it starts off with basic SIPs, direct stock investing, recurring deposits, etc. Different forms. There are many more avenues. I'm not going to go deeper into that. As you move further up the ladder, you get access to your index funds, SGBs, corporate FDs, and again, this is not sequential. You might have an SIP in an MF, and you can have an entry into some kind of a PMS or whatever. There's no correct sequence or ladder, but generally, if you were to estimate it by capital range, as you move up the capital ladder, you get better access, and you are more comfortable in investing in some of these stuffs. So it leads up to AIFs, alternate funds, which are big ticket items. So your PMS, the minimum entry is around 50 lakh rupees for a PMS. Then you have private debt, startups. You get introduced to venture capital funds, etc. All those things happen as you progress up the career ladder or the wealth ladder. And again, but again, it's not, I would say the ultimate is hedge funds, creating your own family offices. When you have your own family offices, the possibilities, the avenues, the ways you can invest greatly increase. So, uh, like it is mentioned on the slide, the risk increases as you move up the ladder, but so do the opportunities and avenues. So I'm sure all of us, in some way or form, are at some stages of this, probably, diverse across multiple steps of the ladder. But the aim is always to help and make yourself reach to the next level, to grow yourself, to grow the wealth that you're building, because that ultimately is what all of us, in some way or form, are striving for. So now moving to the actual core of the session, which I want to spend more time on. So on one side, you have all your instruments, you have all the ways to invest. If you're a student of finance, if you're learning something, you know that you can invest in certain things, it gives you certain returns. If you invest in a certain instrument, it'll give you certain risks. So all that is on one side. You have your SIPs, you have your insurance, you have your equity, you have a roadmap or a plan of how you want to allocate your assets. But the main focus that I want to, bring to the session is the mindset, the heart, and what do we need to do? What are the different phases of life? I'm sure, me being in my 20s, I can relate to some of the phases which have already happened to me, which I'm sure some of you are yet to face, or some of you are prepping up for. So if you're in college, post college is going to be about career. Post career, once your career is starting, once you're in a good job, it's going to be about starting your own family. And once the family's part is sorted, you're going to have a kid, and everybody is kind of somewhere going to go in that ladder zone. So developing the right mindset, having the right attitude can be a very crucial factor on how you come across or how you face these transitional phases. So consistency, patience, emotional control. We'll talk about this a little more in depth. And like I'm sure you guys have come across a book called Psychology of Money. There's a very interesting quote which says that money is 10% knowledge and 90% behavior. So we're going to talk about the 90% behavior, because the 10% knowledge is something that you're going to get across from different sessions. I want to specifically focus on the behavior aspect. And as you can all see, both of these have to go hand in hand. You might be a very knowledgeable person. You might know how to trade derivatives. You might know how to, invest in crypto. You've made a good fortune out of crypto already. But unless you have the consistency, unless you can have the mindset to hold where people panic and sell where there is a rush towards something, you will somewhere end up scratching your head on what to do and how things are done. Yeah. So your mindset defines your money journey. Life will test your patience. Markets will do it too. So, equating back to life. So once I was done with my college and my PG, I had two options. I had an option to continue my family business, or take a step out of my comfort zone, start a company of my own, or join a company which is doing something exciting, which is somewhere the decision that I took. I took the path of working with a company called Fans on Stands. They were working in a very niche industry, sports industry. And if I were to, you know, at that particular point in 2018, the idea of F1, etc., was not so familiar. Like you had clusters of people who are really into sports, motorsports, and who, follow F1 very ardently. I was one amongst those people. So I knew that, there's something around sports. F1 is really big across the world. And now if you see, F1 has blown up huge in India across the last 3 4 years post COVID. So uh, always be open to new opportunities. Always whenever you're taking a decision, don't just think about the consequence of that particular decision, but also try to take a step back and see the overall ripples that will create. So even when you're investing, even when you're taking a big decision in life, there will be, sometimes situations where things will seem out of your control, out of your hand. That is where you have to take a step back, get yourself in a Zen mode, and then take a decision. Yeah, Abhishek, please, you can unmute yourself. Yeah.
So I put my query in the chat.
Okay. Okay. So the chat queries, do you mind if we take it a little later, or
Yeah, so
yeah?
sure.
Okay. Okay. So yeah, it's okay to feel pressure, fear, or FOMO. This happens every single day. You come across new opportunities, you come across new avenues to invest, you come across new news and trends. Yeah, so you will come across situations, you'll come across different uh, phases in life where there is pressure, there's fear, there's FOMO. You'll come across opportunities. So if I were to equate it to a very recent example, if you've seen the last couple of months, there's a huge inflow and flux towards gold and silver, the precious metals angle. Everybody is wanting to, somewhere catch the bull ride, which gold and silver. If you see historically, the 1 year returns that equity has given versus gold and silver, there's a huge mismatch, and people are now starting to pile up. This is where smart money will make the exit. Where retail takes the entry, smart money makes the exit. So, coming back to this, there is going to be opportunities around every corner. You don't necessarily have to take every opportunity. You don't necessarily have to be part of every trend. And what will determine whether you actually take a rush decision or not is how you approach the problem. And the next part is very beautiful. It says it. What matters is how you respond, not react. So reaction often leads to mistakes. When I hear somebody has made a fortune in crypto, or if somebody is invested in silver or gold and they've gotten X% of return, there's often a feeling or a reaction that I should do it too. And why don't I do it? As compared to, let's say, if you take a little bit more time, understand the risks involved at the current scenario, at the present situation, and how you respond to that. So if you respond rather than react, you will often end up making better decisions and more accurate decisions, is what I have come to notice across my experience in investing. And small steady progress big always beats emotional decisions. So sometimes the most boring of concepts, an SIP in a mutual fund, basically every month some amount being auto debited from your account, versus, let's say, me taking a big decision to invest in a hot stock like defense, like the defense sectoral theme is working really well, probably might seem really good in the short term. I might make a huge percentage of return, but who gives the guarantee that I'll be able to exit at the right time? And once the FOMO is gone, when the stock starts to dip, is there a guarantee that I could be selling at the right point as well? So sometimes steady and small progress beats the big emotional decisions. And another aspect is balancing life, family, and growth. So, most of you, if you're in college, like I said, you will next gear up and prep up for work. What you are expecting out of your life right now is going to be very different from what you will expect from your life once you get into a job, once you get married, and once you have children. So your why will keep changing. You will never have the consistent why. Probably on 1 or 2 points you will, but always as you progress, as you evolve in life, the why keeps changing. Your reason for doing things will slightly change. I'm not saying it will become 180 degrees, it will not be a completely opposite of what you were aspiring to do, but there will be incremental change. There will be change in direction of your thinking as well. You will come across multiple phases, emergencies, health, marriage, kids, job changes. They're all part of life. So the pressure surrounding this is real. I know a lot of people who are currently, a lot of people who are writing their CFA level two with me, they're actively hunting for jobs. And when I have conversations with them, the first question they ask me is that you're in a completely different industry and you're doing CFA. Are you planning to shift into equity? So again, my answer to that is very diplomatic in a sense. I say that I'm comfortable in the role that I am because I really love the profession that I am working in. But finance is passion, investing is passion. So my purpose of doing a CFA is to make myself better, make myself more uniform in the discipline of finance. And if an opportunity presents from the other side, 100%. But I also have to factor in stuff like I am 29 years old. I will not get the same opportunity that a fresher gets. Companies who hire freshers would not prefer hiring me at those particular roles. So there's always a opportunity cost. There's always a pro and con to every decision that you take. And financial stress, when somebody says that they're in financial stress, often you will never realize that you're in a financial stress because there's always some amount of money either in a, let's say, your savings or in the bank account or something that gets you by. But financial stress does not mean lack of money. That's the misconception that I want to break. Financial stress basically means that if you cannot structure the way you are investing, if you cannot structure the way you set up your portfolio, if you cannot structure the way you set up your life, then that in some way leads to financial stress. Maybe you're not able to see it today, but 2 years, 5 years, 7 years, 10 years down the line, it will start to show up. And the most basic, I would say, indicator is your lifestyle spends. If let's say you're in a job, you start earning, you get an increment. And I'm talking about this because I've seen this firsthand. Started as an intern, got a full-time job, started getting the month-on-month income, then realized that yes, I can spend on things without depending or asking permissions from people. So that often leads to a life cycle change which cannot be sustained. So knowing what you require, setting a structure about it is very crucial, and that is what can set you apart from financial stress. The fourth point, of course, is family health, peace, and purpose is greater than any portfolio value. Right now, I'm still in my late 20s. I'm not yet touched 30. So I'm still in that phase where I prioritize earning, I prioritize growing. But somewhere, I'm transitioning into that phase where I realize that money is not everything. The peace of mind, the comfort, the purpose that I want for my life is much more than just my profession, my investment, my tools to make money. So again, everybody will come across that phase. I'm not trying to say that you have to get into that zone or mode right now, but probably you have to develop your mindset in such a way that when you come across, let's say, a decision between family and career or whatever, you should be able to take the right decision. You should be able to approach it the right way.